It's time for Stock Picks. Today we bring our focus right back home, shining a spotlight on three local counters, AVI, ABSA and Pick and Pay. Joining us now to analyze these stocks is Nomtha Ngumbela from Umthombo Wealth. Nomtha, thanks so much for your time this afternoon. Let's kick things off in the banking sector. You know, the banking sector, really a quality sector here at home. The likes of Standard Bank, the likes of FNB, which is housed by First Rand, Nedbank, as well as ABSA. You are choosing ABSA in that sector. Talk to me about why you're choosing this counter. Is it because it's priced lower than its competitors?
Yes, good afternoon. And you just hit the nail completely on the head. I think to give some context there, the company has gone through quite a tumultuous, if you put it lightly, last two to 3 years. Issues in their African businesses. I think some would contextualize it as a revolving door of executives as well. But we still see value in the counter. Its last set of results, you saw tremendous improvement in terms of their operations. Their CLR ratios came way above expectations in terms of improvement as well as some ROE expansion. And we see the new CEO, Mr. Kenny Fihla, as a good addition to the bank. He comes well experienced. He has got good Pan-African experience as well. We think he'll be a good addition to ABSA. And like you said, from a valuation perspective, it's trading at a discount to its peers, as well as a tremendous discount to its net asset value. And in our own internal valuations, we see the implied dividend yield now in excess of 8.5%. So, you know, while we wait for it to right its own ship, you're still getting a nice little dividend there to keep you at bay.
And you know, Nomtha, ABSA has been under the spotlight for a few years now. You mentioned those leadership issues as well as the transformation issues. Now, this might not directly impact its balance sheet, but in terms of strategy and vision, it does scream wait and see. Are these factors these factors something you're factoring in when it comes to, you know, buying ABSA shares?
Yes, of course. I think management credibility is of utmost importance. And it is concerning that we've seen this sort of revolving door of executives come in and out of ABSA. Some issues of their own, doing, and others perhaps not so much. But I think as we do in investments, you have to look forward. And when we look forward, we see a CEO who has great competence, who is capable, and you know, he's young enough and fresh enough and ambitious enough to really take ABSA to that next level, which I think he can do.
Let's move over to your second pick, another one, or one that, you know, where you're relying more on a turnaround strategy. Pick and Pay. Issues around leadership also over the past few years, are concerns around the Ackerman family's involvement in the running of the company. They've, you know, since taken a step back, and we also saw that two-step plan coming through where it managed to conclude its rights offer as well as list Boxer. Just take me through your analysis of Pick and Pay.
Yeah, I think that was a great intro into the company. It's incredibly topical, polarizing, if you can say, dividing. And it is a function of your belief in whether this turnaround strategy that is being led by Sean Summers can be executed. So, you know, I picked Pick and Pay, but with the caveat that it is an incredibly high execution investment case. As you've said now, they were in a very difficult position pre the IPO. But since then, I think they've completely cleaned up their balance sheet. They've, capitalized it quite nicely. And it actually gives Sean Summers and his team some dry powder to now really go in and fix those, you know, core Pick and Pay stores from the corporate network, which they started with, and now to move on to the franchisees. And, you know, it's been a bit of a disaster from a confidence, from the suppliers' point of view, confidence, consumers, confidence in them, as well as our investment market. So, you know, you have to believe in his ability to re-steer this into, you know, more prosperous grounds. And we believe he can do it. Like you said, he is an experienced and capable leader. He was at Pick and Pay for 11 years. Before he left as CEO, and he also has a lot of interest in the retail space. So, if we're going to bet on any horse, I think Sean Summers would be the right one.
Let's talk about market share for a moment, Nomtha. Now, we do know that Pick n Pay has been closing down stores that have been unprofitable for the group. I think over the past year or so, they've closed down over 30 stores, right? In terms of how it compares with its competitors, just take me through that and your analysis of that, considering that we are seeing less presence when you walk into a shopping center in South Africa. And then we see that Boxer, of course, is expanding. But from a Pick n Pay side, there are less stores.
Yeah, I think that's intentional. I think it's important to remember that Pick n Pay is not trying to compete on a market share perspective. They're trying to really sit down and clean up this portfolio. And that's why they earmarked those 100 stores to either close down or revamp or convert. And I think maybe that's a key that some investors are missing in the Pick n Pay turnaround story.
Okay.
It's going to look like a very different business in a few years' time, a smaller business, but I think maybe a more nimble, more flexible business that isn't being weighed down but by unprofitable stores. So, I think one that was quite popular in the news circuit now was the closure of a Tide Park store. I think people must understand that 50% of that store was just storage space. That wasn't necessarily generating any good cash for them. And that store in itself was not profitable. So it made sense then from a commercial perspective to shut it down. And that's what we're looking for Sean Summers, is to make those difficult decisions to get this company back to a profitable place and to stop the bleeding and to stop the losses.
And before we move over to your third pick, talk to me about Pick n Pay's online offering, right? We see Pick n Pay ASAP, and there's also that partnership with Mr. D.
Yeah, so I think it was a great showing in their last trading statement. I believe it was up around 42%, their online offering. But, it would be remiss of me not to mention the fact that they came from a very low base and they're playing catch up in a lot of ways, where 60/60 has kind of been a phenomenal showing here in South Africa. And that first mover advantage came out of nowhere. And the other competitors have struggled to keep pace with 60/60. But, it's good to see ASAP trying to make those incremental improvements. But yeah, still a long way to go. I think it was a good move to partner with Mr. D instead of trying to completely carve out their own network. But yeah, just a reminder that it is coming from a much lower base, and there's still runway for them to improve, but it will take time.
Now, another consumer-facing company, AVI, your last stock pick. Take me through your analysis of that counter.
Yeah, I think AVI might be the one that I need to defend less. And not as much execution risk there, not as much management risk. I think management here is a core part of this investment case. Reliable, consistent, and have just been able to weather some very, very difficult storms. We saw in their results last month, not, a great top line number, relatively pedestrian, but where ABI really did shine was around their earnings number, as well as that consistent dividend that we have come to expect and love from ABI. So for me, this counter its price performance has been quite weak over the last few months, and it offers a really good opportunity for investors to buy into a company with good management style, a great portfolio of assets, including the likes of Baker, the tasty but messy cheese curls, corn nibs, and something that's also offering a dividend yield now of around 7%. So even if we're looking at softer earnings of 4 or 5%, that total return narrative is still really resilient from our perspective.
And Nomtha, I was reading an article earlier, and there were analysts saying that the group could deliver even higher or bigger returns if it focused solely on that snacks and beverages division. Just your thoughts on that. I mean, it is quite diversified. There's personal care brands as well as fashion brands in AVI as well.
Yeah, I think probably it's the question that management usually tries to not necessarily avoid, but doesn't really enjoy, is the likes of I&J and personal care and the foot cares. Does it really make sense to continue having these assets as part of their portfolio when they don't necessarily have a clear place there. And you're right, the enticers and the snack works continue to perform phenomenally despite price pressures, but the others tend to be laggards. But the hope is that one day management will be able to sell the likes of I&J. They did say that this current environment not really conducive to that. But we hope and pray that one day a buyer will come and buy it at a phenomenal valuation.
Nomtha, thanks so much for your time and sharing those insights. That was Nomtha Ngumbela from Umthombo Wealth.